Good day, everyone. Well, we see that the market averages are attempting some sort of breakout, but they seem to there is some reluctance, and there is some kind of call it a holding pattern for now. S&P and the Dow did hit new highs, but again, it's not the kind of breakout that you'd like to see. They hit new highs, and now they've kind of been stagnating the last 3 days in a sideways formation. And on the other hand, we have seen a number of leading stocks become actionable. So market internals are looking better, and as noted before, the amplitude of these major averages has calmed down. They have tightened up considerably since December, when you had these wide swinging go nowhere up and down, you can't even call them up or down trends. They're not trends, they're just up and down motions within the averages, and that's tightened up. So the odds still favor that the market probably is going to go in somewhat of an uptrend, maybe one of these baby stepping ones, as QE tries its best to push the market averages higher. We all know that with the Fed governors, that report that came out at 2 p.m. Eastern yesterday, that was good for the markets because they interpret that as the Fed taking the general position that rates will not get hiked until later this year, if then. Of course, that a hike in rates has to be accompanied by an economy that is turning the corner, but that might be further down the line than anyone expects. So in the meantime, QE is trying to push the market higher while we have negative forces within the market that prevents the market from really moving in a proper uptrend. We had stronger uptrends in 2009, 2010, 2011, and really the last couple of years the uptrends have been sloppy and more anemic. Action on the part of leading stocks has not accompanied market direction. If you look back at true uptrending markets, you see a lot of healthy stocks jumping forward, and there's a lot of profit opportunity. But really, the pickings have been very slim the last couple of years, and therefore, as we have admonished our members, take the profits when you have them in context with the chart, and be sure to keep your losses very well contained. And if you are disciplined in that manner, you can baby step your account, a few percent, several percent here and there, and then it will add up over the ensuing months. As Gil's account is testament to the last couple of years. So you don't even need to be, I know a lot of people say, well, this is not the kind of market I want to trade because the best I could do is maybe 10%. But of course, if you do baby step your account in that fashion and you remain disciplined, you can be looking at gains of 30, 50, even over 100% in a year's time. Now, I'd like to go over some stocks that have become actionable over the last several days. Let's see, the first one here is Regeneron Pharmaceuticals, and let's see, do I have the control, Gil? I don't think I have the control yet. I'm trying to type in Regeneron. I think Gil has left his post. So when he comes, oh, there we go. I'm waiting for the box to, oh, there we go. Okay, Regeneron. Looks like it's delayed. Hold on a second. Yeah, it looks like there's a bit of a delay here. Current symbol. Huh. Let's see here. Okay.
Type in the new symbol, Dr. You can see you entered it in twice. Yeah, there you go.
Yeah, no, it was delayed on my end. Anything, but now it looks okay. Okay, so
looking good.
Regeneron, and on the 8th of May, it went actionable. So it has made a nice move since then. Again, this is a market that may not resume its uptrend immediately. It may back and fill some more, and you want to make sure that you have a nice profit in this one. in context with the chart. It's not doing anything wrong yet, so you might want to hang on to your position, but keep your stops tight on this one. Watch it like a hawk. The next one is MOH.
Sorry about that, Dr. K. I got in the way there.
Okay, so here we go with, this was on the 8th, we recommended it. It was on the, had a nice gap up move, and it too, you can see in context with this chart, it just keeps going higher, but you know, you got some profits in this. Watch this one like a hawk. Keep your stops very tight on this one as well. You know, in this kind of market, when you have this kind of profit, I think, what is this? It's about a 9% profit, 8% profit, maybe even 10, depending on where you bought it. You know, it's not bad. And you do enough of these, and your account will blossom over the coming months. Third stock here is AYI. And that was, we put that one on the list on April 29th. It's a bit slow to, okay, here we go, April 29th. And that's had a really nice move from the time we put it up. So again, you know, these all have one thing in common. You're sitting on nice profits, so you don't want to give them back to the market gods, and you want to keep your stops tight on these names. Here's another one. This one is probably one of the better performers we've seen. It's done absolutely nothing wrong. We put it on the list before the gap up. No, I think it was the gap up, actually. You know, the Bible gap up here, and it just keeps going higher. And it forms these tight little formations, and those are very constructive in terms of the price volume action. So this one, if it goes sideways, that's fine. If it repeats what it's been doing, it might continue along a bit further. And finally, we have CRTO. And we put this one on at first on the 21st here, April 21st. And then it had this sharp pullback. So, you know, right back into the base. If you did buy it there, you probably sold it there, which is fine. You know, you want to keep your, like we said, keep your stops tight, very tight. You don't want to wait for this to just go all the way down to, you know, almost 40 bucks. But then it issues a pocket pivot, and we indeed did suggest this one again on the 1st of May. So, you know, you might have sold it here on this day, the second day here, and part of successful investing is being able to look at a stock with an unbiased eye. So it's just because, let's say you lost a little bit of money on this one, that doesn't mean that this new actionable buy point is not something you should take. And then lo and behold, the stock has done a great job from this buy point. It looks like it's up something like 15, 16%. So again, if you did buy it on the on the 1st of May, you want to keep your stops tight on this one because you've got some good profits in this thing. And with that, I'll turn it over to Gil.
Thank you. Let's see. Yeah, I think it's still, despite the indexes coming back up to the highs, the action has been constructive, you know, since you hit the 50-day here and you've been up. So a little consolidative action here seems normal. The S&P, you can see here, is at an all-time high. Right now, if it closes here, it would be an all-time closing high. And, you know, once it broke out on Monday, it's been holding tight. So you can't say there's anything negative about the index action. I think the real key here is, like I said last week, and you want to watch for this, it's the Russell 2000. I'm showing the iShares Russell 2000 ETF. The Russell 2000 getting back above the 50-day moving average is what you wanted to see as confirmation that maybe this rally has legs. And it does, but you know, it's still a matter of picking the right stocks. And, you know, to beat a dead horse or horse to death, that Dr. K already pointed this out, is you have to be somewhat active in terms of looking to buy weakness. And when I speak about weakness, it's the stocks that showed prior strength that are pulling back, sometimes in ugly duckling fashion, and you have to kind of step in there based on some overriding factors. And I'll try to convey that. Somebody asked me today, what is an ugly duckling, define an ugly duckling. I think someone asked that a couple of weeks ago on one of the webinars as well. But the reality is there is no definition, I think the flaw in a lot of people's thinking, and I admit places like the IBD, they brainwash people into thinking this, that it's like some sort of a baby's toy, where you identify the shapes and colors and fit them into the little holes in your plastic desktop thingy or whatever. For any of you have kids, you know what I'm talking about. And as if everything can be reduced down to some sort of like definition or shape or color or whatever that any fool can identify without putting in the proper screen time. And I mean by that basically a trading experience and time watching the markets trade, and gaining judgment thereby. And so, to me, it's just something. It's a stock that is basically a leading stock, and it goes into correction, and then benefits from rotation back into the name, which seems to be what happens in this market. So there's a lot that goes into thinking that through. A lot of times you see names, groups that are out of favor, they come back. Names that are out of favor will come back. And, probably the most notable example right now is BABA. And here you see on the weekly chart, this was my biggest position, but I just sold it. So it's getting a little MACD stretch there. I'll buy it coming back in. I think you should get a little pullback. And that's basically what I do. I move around from name to name on a list that I'm watching, maybe, I don't know, I haven't counted them, but I'm going to say 30 names or so that I kind of focus on. And I'll move around on those, buying them on weakness, selling into strength, and just kind of rotating around. And basically doing what the market's doing, which is rotating around. And I think you see a lot of rotational action in terms of leadership and the position it's in when it turns. So the ugly duckling concept here is, well, there's a couple things you can look at here. Number one, a big hot stock breaks down and undercuts the prior lows of this IPO base here. So now you're undercutting. And you might even be watching, I like to watch financial TV just because it really makes me LMFAO and roll on the floor. Is that ROTF? I don't know. Like my kids say that using all those acronyms is kind of so 2000s, as they like to say, which just continually makes me feel older and older, which is fine. As my 97-year-old grandfather said to me, that's kind of the idea, is that you want to get old. That means you're still living. Anyways, I digress a little bit there. But in any case, you see the undercut, and everybody on CNBC is telling you, it's going lower, and everybody hates the stock. Even I thought it was a short, possibly. And so it's getting to the point where even I'm thinking maybe it's a short. But if you notice, it starts to show some strong action 3 weeks ago with this big upside week, which shows up as a buyable gap up type move, bottom fishing buyable gap up. And you could have bought that, even though it closed in the lower part of the range. But, that makes sense because you're coming out of this range here. And as you come above the highs of the range, up to this high, above this high, above this high, it makes sense you're going to run into some resistance. And what happens is the 65-day exponential moving average, the black line, provides this support. So you pull into it, and then the other day you had a beautiful buying opportunity as volume has been drawing up. You pull into the 10-day moving average, and by the end of the day, you're flashing a 5-day pocket pivot. And I've talked about 5-day pocket pivots before, and they're sort of contextual pocket pivots in that when I see clusters of them, or when I see them associated with tight action after a buyable gap up sort of move or something like that, it's when I'll take heed. And of course, you didn't have to buy on the news on Tuesday that the IRS was looking at a ruling, changing their ruling on the taxability or the tax status of Yahoo's spinoff of their stake in Alibaba. You could have waited the next day, pulls into the 10-day, and then launches out of there. You get a pocket pivot. Now you're going higher today, but you're starting to come in, which is fine. I think it probably needs to come in a little bit. I'll just watch this on the intraday. I may be back into the stock later on today. We'll see. But that's a classic example. And we can use as a model this Lanet, because we were putting it on. And Dr. K, where do we put this on? Like down here is a pocket pivot, then a Bible gap up, another Bible gap up. And so where IBD is telling you that, oh, it's still 6% away from a buy point, we're telling you buy the thing down in here as it's rounding out a new base. So it's a leading stock. This is what it looked like at the time on the weekly chart. It's rounding out a nice base, and as it comes up the right side here, this is where we're looking to buy it. And if you look at the leadership in this market, say over the last year, you're going to find that some of the best price moves, most of the best price moves, occur in leading stocks that have been correcting, and then as they come up and off the lows of the base. It's as if they've tilted the whole world over 45 degrees to the left, so that now, so if you took this chart and tilted it 45 degrees to the left, you'd be breaking out to new highs down here, okay? And that's so that, with a skewed QE world, I think this all makes total sense, right? In a weird sort of way. And that's what you're looking at, and that's where you get the big move, because if you sit through the break, here's a breakout right through here, just under 60, and you break out, you pull back, and you go a little higher, okay, getting excited. This is where IBD is telling you to add 3% of your position here, as you go up 2%, and Jupiter aligns with Mars, and you add to your position there, and it pulls back again, and then it goes to highs again, and then it just shakes. So here, from the breakout point, there is no coherent action. The most coherent action is coming up the right side of the base, when nobody sees it, or nobody's really paying attention to it. And IBD is telling you that you're X% away from a buy point when it gets to a new high, which everybody sees. Anyways, now you look at the stock, maybe now it's setting up in a new base, and this is where you might start to watch it and start to get interested. So BABA, coming in a little bit here, acting well. Cyber, let's look at that. Last week, and I'm going to say, if this was 1997 or something, and you saw a gap down like this on heavier volume, you'd want to get the hell out of the way. In this market, I look at that as somebody gapped it down and it held, and now the volume's drying up and it's holding at the 50-day, rather than looking at this necessarily as a weak move, because within the context of this, the place to be buying this on the last pullback in here was into the 50-day here, and that was the place to be buying it, because then the move to the upside is generally fairly uniform. Now, as you're getting out to new highs, it starts to get all choppy on you, and it starts to look ugly here. But all this is doing is building a cup with a handle. That's all it's doing. And volume declined last week, so that's not unconstructive. That's actually pretty good. And so that's where you're buying it. Now, if you get a big woody and you're going after it here, pardon my French, I don't know if that's French. You get a pocket pivot here, and you think it's breaking out. Maybe all the IB dweebs are jumping on it here and thinking it's buyable, and immediately they hit it. But you have to keep a couple of things in mind, that the stock is on an IPO lockup expiration still, which I think occurred way back here somewhere. I forget. No, in March, somewhere in here. And the stock just went higher. But there's still some insiders. There's a fair amount of stock, if you're familiar with the story, out there that insiders may want to unload. So sometimes I watch these and I'm thinking, and I'm trying to think through this based on what I know. So understanding the stories surrounding your stocks is probably also helpful in this market. And I'm thinking through, okay, maybe that's what's going on. You get a burst of selling from a bunch of insiders. And having been a broker, and I had a lot of friends in Silicon Valley who were working for companies, and they were getting stock and they were exercising their options. And I remember when Macro Media came public, and a friend of mine was big in the marketing department there. He had a huge amount of shares, and he was waiting to sell them after the IPO lockup. But it was done in stages. But what I remember is that they would all do them on the same day. and they were all sort of handled that way, and the company was dealing with all the administrative aspects of that particular, I forget, it's a 134, well, I forget what the number was. It's I think it's a 134 sale or something. Anybody out there who knows that, you could just spew that out at me. And so they'll tend to happen on one day. So if you don't see it a follow-up to the selling, in other words, you see it drying up and holding along a moving average, now I'm getting interested. So the reality is I'm looking at buying this stock a week ago, and now it drifts back above the 10 and 20-day moving average. It's sitting there real tight. Wouldn't be surprised if this thing turned around and went higher from here. It's trying to. But the point is, the buy point was probably in here. And, to the extent that I can define an ugly duckling, these are the sorts of things I'm talking about. And it's not something I can put into a template for some moron who has no experience in the market to just follow without thinking and be successful with it. It just doesn't work that way. So I think part of what we're trying to do here is, everybody I think has to learn to trade for themselves and think for themselves and make their own decisions and have their own true understanding of what's going on in the market. Not just, if Jupiter aligns with Mars, I do this. If the moon is in the 7th house, I do that. It just doesn't work that way. One of the reasons why I love that song. But it's sort of the anti-reality of stock investing. In any case, so I'm watching this right now. I'm going to buy a little bit of it maybe today, see how it acts, and if I got one more pullback below 63, the 10 days at 62.76, that would make me happy, and I might step in there. But in the meantime, look at something like a Mobileye, and it's it came out here, so you get the gap up, it runs up, comes down, probably buyable along these lows. Earnings come out, and you gap up here. Then you go out to new high. You don't really want to be buying. Now I'm kind of watching it in here. It looks to me like if you're looking at the weekly, you've got some overhead on this side. So it seems to me that you're going to spend some time backing and filling in here. And the key here is probably the 20-day, the green line here, or the 50-day. Now, if we had a voodoo type, volume dry up coming into the voodoo type move coming into the 50-day moving average, that would be optimal for me. And we'll see if that happens. I like the story. Do you like the story on this one, Dr. K?
Yeah, so I think it's a solid. It has a solid fundamental foundation.
Do you think it needs more time?
And yeah, I think it's got to. It's in the middle of a basing pattern, so it's probably going to need more time.
Yeah, that's my thinking here too. That's not to say that you couldn't play these moves up off the lows, and made some money. Now you can kind of hang out and wait to see how it pans out. But it looks that way, and I guess that's the point I'm trying to get across. And you're seeing the same thing, which is good, I think. But let's look at another one, GoPro. Okay. Here's GoPro, hot name, big move. The other thing is that this sort of ugly duckling concept is also is a corollary to the work I've done on the short side, because everybody's familiar with well, maybe not everybody, but anybody who's read any of our books, and particularly the most recent one that just came out on short selling, which I'm happy to say I don't know if you saw the email, Dr. K, but we sold the Chinese translation rights for that book.
That was good.
Yeah, a couple days ago. So 1.3 billion Chinese can't be wrong. And somebody emailed me and it said, "Does this mean that the Chinese are going to start shorting?" And my answer is, if they aren't, they are now. So, anyways, what I really like is listening to my 16-year-old daughter read it to me in Chinese, because she's now finished 2 years of Mandarin Chinese, and she's reasonably fluent on a very basic level. I'm sure if she went to China, she could communicate with people. In any case, but it's kind of neat to see your stuff in a weird language. So I'll be waiting for the day when it's translated into Martian or Venusian. In any case, let's see.
Go intergalactic. That'll be
There
the
you
day.
go. Yeah. But anyways, GoPro, the punch bowl of death formation is not atypical for a hot stock. Okay, so here's a hot stock, and you're coming down, and it'll form a big ugly punch bowl and run up the right side. Now, do you want to be chasing it up the right side? No, you'd rather be finding the turn in here. So some of this ugly duckling stuff is also a corollary to the work I've done on the short side. And when you start looking at all these charts over and over and over and over again, you're naturally going to assimilate a lot of subconscious facts about them, whatever you want to call them, impressions. So investing is an art, yes, as much as a science. And I would point out Dr. K and I are both decent musicians, I think. And so there's an art aspect in personalities, and I think that, think if you're just an engineer and that's all you can think, you may be in trouble. So you want to go back to the post-World War II secular bull market, where the rules were clear-cut and the whole growth model worked. I think we're in a different world today, and I wouldn't call it let me run this by you, Dr. K. Would you call this the post-World War II? If the period from, say, 1945, 50 to, say, 2000, maybe 2006, 2007, could be considered the post-World War II growth boom in the U.S., what would you call the period following 2008, if anything? Or do you consider it all part of this? What's that?
Well, I like to see things in terms of where things are headed on a technological level that may have vast implications for humanity, or at least for individual countries. And
right.
I see the world really as like post, the dawning of the internet was like post ARPANET. So we had the post ARPANET era in the 90s, and it's still with us. And now we're starting to see potentially post internet. I mean, the internet's not going anywhere; it's going to continue to grow. But we're seeing post-internet in the form of crypto technologies and the second and third order implications that these technologies will have on existing industries, really turning them inside out in some cases, for the greater good and for much greater efficiencies in many industries. I don't think there's any industry that these technologies won't have some sort of positive effect on within a generation. And as many smart minds have said, in actually quite a bit less than one generation, we will see these changes take place.
So we're now in the cyber age.
Yes.
Where even money is a cyber event.
Right.
Anyway,
crypto technology.
all this is to say that I don't think it's the same. We're not in the same environment, and you have to think outside the box. But I think a lot of the basic principles still apply. In any case. So GoPro's another one of these ugly duckling things, and here you get a buyable gap up, but it doesn't pan out. It gets sold into, and that's okay. If you bought it, and you get stopped out real quick, which is why you want to be able to buy something. Say, the low here was 115, and so if you bought it like 52 and change, maybe you're down $1 when you're stopped out, 2%, no big deal. Milk fat, as we used to say. And you come down into the 20-day moving average here, and the volume's drying up. So now you retest again on Voodoo, and now you're looking like you want to turn. And last week I was talking about this thing being viable in here along the 10-day as volume dries up, and sure enough, it's moving higher. You get a pocket pivot type move to a higher closing high, but it didn't really clear the peak here. So you're backing and filling. You're probably going to get tight in here maybe for another few days. Maybe you go higher. There's a huge number of shorts in here who think that GoPro is dead. We've talked about this as Plantronics when they were making headsets for computers and phones and whatnot. People wanted to short that because anybody could do it and it was going to have competition, which of course Plantronics did, but it didn't stop the stock from having a huge run. So, anyways, I want to go through a couple other names. CRM. Viable gap up this morning, 73.33 low, but it's having some trouble holding it. It's been the subject of buyout rumors lately, none of which have panned out. You see BABA coming in, so you can kind of smell it when it's going to come in. I think what happens is what I see on the let's look at this 620. what I start to see here is that you had the MACD, the histogram stretched here, but the lines kept going higher. So when you start seeing this sort of divergence, this line's going higher, but the lines are getting lower, that's a type of a MACD stretch. You could even sold into here, just take profits on a short-term basis. And you're coming in, and I'd watch it when it gets to, say, the 20 period at 92.84. Maybe that's a little lower by the time it gets there. Maybe it dips below, and the 6 line crosses below the 20 line. And so, I know the whole world wants to buy it probably right here, but the bottom line is you had to buy it a few days ago at the 10-day line. And you get a nice move. And, 5%, 6% in a couple of days, you want to take a lot of that and not sit around. Let's see some other names. So CRM may be buyable if it holds at 73.33 low or sets a new low. Fortinet, you had a pocket pivot 4 days ago, and you pull right back in. Now, this was heavier volume, and I saw them in the middle of the day. Somebody came and started hitting the stock with about 140, 150,000 shares of stock, knocking it down. I don't know if that was a block of insiders or what it was exactly, or somebody just looking at it and looking at the weekly chart and thinking this thing's extended, which you could say it is. It's had a long run. Doesn't mean it can't go higher, especially if the group continues higher, because I think that the cybersecurity group is still viable as a leading group and phenomenon. And you go back and you look at the solars, say in 2008. What other hot groups were there all running together? Dr. K, I'm trying to think. But in any case, you look at the solars, and they got up there and they kept going.
There weren't as many as we'd like to think, but yeah, the solars, of course, really stood out, and
but there's a major.
Lots of.
It has huge thematic validity. In other words, it's very relevant to what's going on in the current world environment. So solar is getting more efficient. Cyber is getting more efficient. And I'll get back to solar, actually, because that's where my mind drifted there for just a second. But Fortinet pulling in, so I think cybersecurity is still a big theme, and I think some of the stocks are showing this. For example, you get Fortinet, you get a part of it, but you pull in. Pardon me?
Oh, sorry for interrupting. The fertilizers, of course, were huge.
Right.
And
there was a thematic move there, and there was a basis for what was going on in the world. What was going on in the world was the basis for the move, so it was real. So you see some supporting action 3 days ago with the up volume. So it's trying to hang in here. You're running very low volume right now. I think you're like minus 50. Minus 51%. So you're definitely getting voodoo action at the 10-day. So, on Fortinet, I'll step in and buy some shares. Yesterday, I bought some FireEye near the close, and it's popping today. But you're probably going to run into some resistance up here, so it may probably a move to sell into, possibly. And I'd point out I'm working these names very quickly, and I'm pretty busy during the day, but it's not like I got anything else to do, so it works out. But it does require some paying attention. I don't know if this is a market for people just going to sit with the stock forever. I do think you can play trends with smaller positions, sure, but the trends, I think themselves, 10, 20%, maybe 30, if you get them, and that's how you're working it, rather than thinking you're going to buy a stock and it's going to go up 3 times. It's a different world. So FireEye looks okay. Maybe gonna have a pocket pivot today. And you got some buyout rumors last week, and those sort of fizzled out. Cisco said they weren't going to buy them, and the company said that they were not going to let themselves be bought out until they do at least $1 billion in sales. So that sounds good to me. So stock going higher today. Palo Alto Networks comes out with earnings next week, making new highs. And of course, cyber, and those are to me, those are the 4 big leaders. I think this is junk. This is junk. And the fact that they're small stocks, was your tip-off. They were trading 400,000 or 500,000 shares a day, and this all comes back to what? The big stock principle. So you can basically say, in any group of stocks, the biggest stocks are going to be the ones at highest price, most trading volume, most liquid, and those are your big stocks. And the other thing about an ugly duckling is that usually it is a stock that was a big stock. All right, I'm going to go through some questions. I'm not going to, then I'll go back to my list. Somebody asking about VSLR. Well, we talked about this last week. You had this big, I'm just going to call this huge volume support off the 50-day. So that's strong. And then you drift in, volume dries up the last couple days. You could have bought it in here, around 14, just underneath. Now it's turning going higher. If it trades higher volume than 6 days ago, then you could say it's a pocket pivot. But in my view, the reality is, for me at least, I do not buy pocket pivots. I'll buy stocks that have shown pocket pivots and which might be pulling back afterwards on light volume. So the pocket pivot is more of an identifier in terms of the stock I would be interested in. But it's not a buy signal. In other words, I don't mindlessly just jump in and buy it unless it's very subtle. And so for example, a very subtle one occurred on this day. That was very subtle. And the next day, you see, even the next day you had a little pullback. So I want to make sure everybody can see that. This day right here, pocket pivot, you see it? And very subtle. And then the next day you pull into the 10-day, volume dries up, so you get a voodoo pullback. Boom, that's where you can hit it. So, I mean, even in this case, although that might be one to buy, this is even better waiting for it, or even the next day, and then you get this pocket pivot higher. And then it runs up. So again, you get a breakout on pocket pivot volume. It's at a high that gets sold into. So, anyways, getting back to VSLR, like I said, maybe these bigger charts. You guys like these better? Easy to see. I'll keep it on this. It's going higher, heading for the old closing high. And again, here's another. This started out as an ugly duckling situation down around 11. The solar group got hit the other day when, Yingli Green Energy, there were rumors about them going bankrupt, but the stock was already telling you it looked like garbage and had been in a downtrend for a long time. So they hit the solar group. I think it creates a buying opportunity. And if you look at names, say Solar City, you came into the 20-day moving average yesterday. Volume dried up. So I thought that was a buy point. You could have bought it this morning as well. I'm watching CRM coming to 73.35 right now. Real quick. Yeah, that's starting to break down. So it's not really holding. Anyways, just pointing that out in real time. SunPower is interesting because it looks like garbage, but you really got this big cup with handle that it's forming. And I know it's odd, there isn't a prior uptrend and all this other BS, but even the Japanese actually are the ones who came up with the cup with handle formation first when they were trading rice, and they called it a frying pan with handle, in Japanese, of course. And no jokes, please, about a flying pan, okay? Anyways, but you see on the weekly chart, you're pulling in here along these lows underneath the 10-week, above the 40-week, and you're drying up on the weekly chart. So I'm kind of watching this. I look at this as a big supporting day. So it did get some support. It's holding above the 200-day moving average. And I still think utility scale solar is something that's probably going to continue to grow. You're seeing prices coming down. And the Wall Street Journal had an article about how residential is really inefficient, would not exist save for subsidies, but that utility scale solar is starting to become more viable and actually makes sense at a certain size. In any case, these are the leaders. First Solar is another one. I don't like this as much because it's kind of sitting below the 50-day moving average. Let's see, do I have a 200-day in here? There it is. I had to make it pop up. It is hanging along the 200-day. So you have this breakdown after earnings. Of course, the breakout, you don't buy it. Now I'm just wondering, are these going to try and turn? So something I'm keeping an eye on. I've tested positions in SunPower, and yeah, you make a dime here, and you lose a dime there, and make 2 dimes here, and so on, but nothing really major. CRM now at 73.17 on the bid. Already talked about FAY. Somebody says, would you recommend waiting for PANW earnings for buying Cyber or VDSI? I think they're probably going to have pretty good earnings, so I wouldn't really I don't really pay attention. I just watch what the stocks themselves are doing. If I can get a low volume buy point on a cyber, I already bought a FAE and sold it today now, and made some money there. So I tend to be active in terms of taking profits, and it just depends on where things are when PANW comes out with earnings. So, but use your brain a little bit. You do have one, believe it or not. I know some people don't put a lot of faith in their brain, but it is a powerful thing, and I don't think it gets any stronger by not using it. So, what I recommend doesn't matter. If you see, PNW is holding up fine, and as long as it continues to hold up fine, there's no reason to think that they're going to have a negative earnings report. The stock may react negatively, but I don't think that necessarily drags down the whole group unless there's something that shows a deterioration in their growth trend, and I don't see that happening for cybersecurity. So for the most part, with FireEye, favorable earnings report, I think it gapped up here, but somewhere in here, but couldn't hold it. Fortinet, favorable earnings report, it gapped up. Cyber came out with their earnings report, and they actually did move higher, but couldn't hold that because it's a little bit too obvious, I think, at this point at the top of a base. Same reason Fortinet couldn't break out. And of course, what else is there? That's it, pretty much. Those are the four biggest. So they're, if they're all acting okay, and if this is sitting here and it's in that buy position, I'm going to take a position. You don't have to take a big one, but the odds are if PNW gets whacked 20%, yeah, you might drop 5% or something. I don't know on this one, but you scale your position properly. But I certainly wouldn't be afraid of it just because of the fact that Palo Alto's got to come out with earnings. Oh yeah, BDSI. Sorry, I forgot that one. That's acting okay. You can see it drying up on the pullback to the 10-day, so it's coming into a viable position. Not really going anywhere. You do have a valid double bottom, but the midpoint is a failed breakout attempt, but it may be setting up again. So I guess if you're going to buy it, you buy it in here. GoDaddy. Coming in, you could draw a line across these pieces. Coming into the breakout point into this area of congestion. Volume is drying up. I think you're running, what are you running this time of the day? Minus 69%. So it might be giving you a spot to edge in. You sit on the bid and see who hits you. If you bid for, say, 1,000 and somebody pings you right away, then you can figure someone's got some stock to sell. You may be able to kind of lay back. And then, of course, you can always just watch the 620, which right now is not showing you anything except maybe a little bit of a MACD stretch here, and you're not getting additional weakness. So you could look at it in here. So maybe it's going to turn. I don't know. Keep an eye on this one. Sedge not moving. Oh my God. Why does it have to keep moving? What I think is there's an interesting psychological phenomena that you observe here. Is that when I talk about buying this thing here, and you guys go back and look at the webinar back, I don't know, around 421 a month ago, and I talk about buying this thing in here, and people are going, oh, I'm not going to buy it, it's too scary. Well, that's an ugly duckling. Because if you understand what's going on with the company, great estimates, a great product, probably a new driver in the solar industry, these solar inverters, I think they're called. And the whole idea of being able to use energy storage as an adjunct to solar to make it more feasible and more useful, because you want to be able to store the energy that you get during sunny days so that you can use it during cloudy days or nighttime. So that's becoming an issue, and the efficiency in that with these inverters, I guess, has increased. And so I always knew this was a hot commodity in terms of where it was positioned industry-wise in the solar area. And so, this is where you buy. Now people see this, and what happens is people, they're trying to find some way to buy the thing. And I don't really understand the thinking, because if you're objective, what do you know about this with 100% certainty? It's already had a hell of a run. So is it supposed to double from here? I think it needs to build a base. That seems kind of obvious to me, which would set the foundation up or create a foundation for much better growth or another move in the stock, say, going forward. If you keep streaking to the upside, you probably don't have too much left because you're starting to get into what I would call thin air, where you've never really built any kind of a base to wring out the weaker hands. And as the stock goes higher, those hands all get sweaty, you know, and things can slip out, so they'll start selling. But for the most part, you know, you're kind of hanging back, waiting. If you want to buy the 10-day on a voodoo dry up, you could try that. Since it would be the first pullback from this viable gap. But whether you're going to launch and go a lot higher, you know, that remains to be seen. And if you fixate too much on this at this point because you're seeing it pull back and you miss this, if you rode this, you're doing great. If you're in the stock from down lower, then you're fine, and you could probably try and sit with this. I do think this has longer term potential, and I think that's also shown in the solar group in general. So something to think about there. Anyways, Bob, negative news just hit the wire. E-commerce IPO they are backing is getting disappointing pricing. Okay, so use that as a buy opportunity. That must be why it came in. Let's take a look here. Yeah, it got close to the 20 line. Now it's pushing back up towards the highs. It may chop back and forth for a little while, but I don't think that's a reason. You know, they're not buying the stock. You can see the money is coming into this thing in a big way, and it's coming in fast, almost like it feels like it has no time. It's got to get in now. You know, you just see the steady rush of money into it. Right now in real time, I'm looking to buy it back. Got a nice 2-day move out of it, off the 10-day. So, you know, don't want to look a gift horse in the mouth. And let's see where it goes from here on an intraday basis. Remember, the beauty of stocks is that you have ultimate liquidity. You can buy and sell and buy something back all on the same day and do it several times. And you don't have to have a marriage ceremony with your stocks. And use the ability to buy and sell quickly to your advantage. Let's see. Somebody says, thanks for the book on shorting. You're welcome. The wait has been worth it. Learning and planning my first short. Do you have any shorts on your list? Market's going up, so not really the time to be shorting overall. Just because you read a book on shorting doesn't mean it's time to go short, just so you know. SLV, Dr. K, got any comments here on the precious metals?
Well, you know, commodities in general, oil seem to have put in at least an intermediate term low, and we're seeing that you know, in the price action of silver and its cousin gold. You know, if you look at the Commodity Research Bureau, its pattern is very similar to that of the commodities gold, silver, and oil. So, you know, I have nothing to say about putting any money in any of these instruments because we don't know if that intermediate low that was hit a few months ago is not going to be an ultimate low. And given the slack economy, globally speaking, I think that there's still going to be some headwinds ahead for commodities in general.
So that would include, you don't see these as forming a bottom, possibly?
I see them. I see all of these commodities moving lockstep together right now. We're not seeing any coupling yet.
Okay.
So there's not a whole lot to do at this time.
Swerve, potential ugly duckling, or just ugly? Well, how is it an ugly duckling? There's really nothing setting up there. So just because something's coming down, you know, again, I think this is an example of someone you know, a little knowledge is always a dangerous thing. So you want to call something a ugly duckling. It's not acting like one because there's not really setting up or trying to find a low. There's no tight action in the pattern. It's just moving lower. So it's just a dog. Anyways, VIP's getting pummeled. Yeah, another example of a hot stock that is hot no more. And it's getting smashed today as it actually pumping off the 200-day today. Smelgene, as I like to call it. Smelgene is, you know, I've been thinking this is a short up here. It's got this head and shoulders-y kind of look, a little bit of a pinhead here. See the big volume break? Gives you a pinhead. Little pinhead action there. There's that pinball, I forget it. Anyways, coming into the 50-day on light volume. You know, maybe if you short it up in here, I guess you're trying to hit it, and maybe that works. But again, I think with a stock like Celgene, it's something of a market stock. So if the market starts to break down, it's definitely going to start breaking down faster. And so on that basis, I think you can put it in your back pocket as something to come after if you see the market break down. But the market's not showing any real signs of breaking down right now. So what kind of behavior is LinkedIn? Well, you mean you got to put a label on it? I mean, you got a shortable gap down move, and it's just continuing to move lower. So looks like a bear flag to me, descending bear flag. Apple has a big conference coming in June. Inflection point for what? I don't know. Forget the conference. Here we have a violation of the 50-day, and this sets up the old boomerang pattern. Bounces off the 65-day exponential, and you're bopping back to the upside. Here's a 5-day pocket pivot, but you're a little extended. And you notice how you come in on light volume yesterday, and stock's trying to turn. So that actually looks constructive. You know, I couldn't tell you if I look at this. Yeah, okay, you got a little bit of this. And we know that Apple's a little bit long in the tooth. It's also everybody's favorite stock along with Facebook. And so it's going to get support on pullbacks. And I'm not sure where it's going from here, but it's acting okay. And that may be good for the market. So looking at Splunk, they got hit on some news that their CTO left. The stock's been able to come back up. Let's see. Shack, the next CMG. I don't know. Go back and look at CMG when it started. Who knows? All I know it's the first Shack, and that seems to be all that matters right now. Let's see. Workday. They're getting a little play today. That's had some pocket pivots in here, right here, right here. No, not right there, right here. Backing and filling earnings are next week, so nothing going on there. Solar City, let's see, moving higher. It's stalling a little bit at the peak. Cyber, real time, trying to go higher, but not really doing it. NXPI, this thing has been sitting here. We talked about it, tight along the 10-day, 20-day. It's going higher. GoGo, trying to break out on a pocket pivot here. That looks good, like it wants to go higher. Definitely buyable on the pullback in here. Talked about that. Netflix, it's extended, waiting for the 10-day to catch up. Umbrella had to be bought. Kind of like SWKS, Software Tool Works. Am I getting that right again? Or am I screwing up? Skyworks Solutions. God, I always do that. I'm going to have that part of my brain rewired because I keep wanting to call it Software Tool Works. Anyways, it's holding up tight, but it was viable along the 10-day, 20-day, 50-day confluence, and that's where you buy. Now you see NXPI that was doing a similar thing here, and now it's starting to move, but it's going with the market. S-Bucks. Starbucks, it needs time to, well, it's been consolidating, so I don't know that it needs time to consolidate, but the way to operate with this stock is to buy it on pullbacks. You don't want to buy it into strength, you want to buy it on pullbacks. So you watch it along the 10-day or the 50-day if it gets close to there, and that's where you're buying it. It's moving steadily higher, and it is in fact above the 100 level because they recently split the stock 2-for-1, and I think a while ago I said this thing's probably headed to the 100 level, just like BABA. How's that? Data, you had the Bible gap up, and it's holding up at the 10-day on a voodoo volume signature. So what do? That might be a secondary buy point. I noticed the card stocks, they were buyable here on these pullbacks into the 10-day line a few days ago, last week I guess, and now drifting into the 10-day again as volume dries up. Visa's the same way. These things are just trucking higher. They're basically market stocks as well. Market goes higher, they're going to go higher. Visa, you see the pullback here a week or so ago, a couple weeks ago rather, and you get the volume dry up in here on this couple of breakout attempts. Now you're pulling back into the 10-day. It looks like it wants to turn. Facebook, Facebook had this pocket pivot. This is an ugly duckling. Now this is an ugly duckling situation, and Facebook, if anything, it suffers from being overloved, and so it's not going to. It might be overowned, and there isn't enough money to buy it to propel it a lot higher. But you get a pocket pivot here off the 10-day. It clears a 50-day, but I wouldn't call it a pocket pivot at the 50-day because it's too extended, and I'm definitely not going to buy that kind of a move. So you get the pullback yesterday into the 10-day line, volume drawing up. Well, it was earlier in the day. I noticed it's higher, so it's actually supporting action off the 10-day line. Now you're sitting at the 20 with the volume drawing up today, and looking like it might want to go higher. If the market goes higher, again, this is a market stock as well. It will go higher. Amazon is another one I think probably goes higher. You know, you hear a lot of fools trying to short this thing because they talk about how it's overvalued and they're losing money, but if you look at the estimates, you go out to 2019, they're supposed to make, I think, $16.57 a share. So it's selling at 26 times those estimates. And Amazon's got a lot of things going for it. The AWS is probably the fastest growing part of the business, the Amazon Web Services. And that's probably going to drive earnings going forward. So, you know, I think you buy it. I bought a little of this yesterday off the 20-day and got a little move, sold it. Didn't buy it back today. I should have, but I was busy with other things. So then that's fine because I'm not going to kiss all the babies every day. But again, very tight in here after this breakout from what's been a long base. I think this is extends all the way back to 2014. So you're, what are you? I'm going to say 14-month base, 15 months, something like that. I don't know. And it's holding in tight in a nice flag. Okay, just because you had a Bible gap up and it fails doesn't mean that it's over with. It just means that you buying on the Bible gap up didn't work. So that's fine. And if the stock has that kind of a move, then I think you watch how it acts, and it comes into the 20-day here. It's a big stock, and it's trading $435. So, you know, a 30-cent move, a 30-point move is like a 3-point move in a $40 stock. So you got to keep things in perspective here. So it's, you know, the swings are nothing, and everybody wants to short this thing, but I don't think they're really paying attention to what's going on here. And I think they're missing the forest for the trees in this case if they're looking at what the stock is doing right now. And of course, this proves to some extent my point that I've made many times before, that institutions are much more forward-looking than they were in the past. And they're not so worried about what the last 5 quarters of earnings were. So again, there's the old template that I think gets tossed out the window. You look at Tesla, SolarCity, a number of names, when they started to move, Cyber, for example, even, did not have several quarters of big earnings. These days, everybody has the data, so it's obvious by the time it happens. Anyways, where do you find earnings estimates 2 to 3 years out? You can subscribe to First Call. If you can't, then I guess you can't, if you don't have the money for it. So, GEMO. Well, we talked about this as a pocket pivot before it broke out, and it's had a nice move. It's holding up. The Bible gap up, held tight, and this didn't go anywhere for a long time, but it was trying to go higher. Finally, you get the very subtle pocket pivot here, and you're off to the races. So that looks fine. No issues there. Heard V and MC have a $5 billion class action suit. Probably doesn't mean squat. Whatever. Just watch what the stock's doing. Probably doesn't. ISIS, not a stock I'm going to play with. Garbage. Bio-garbage. Biotech garbage. They have their big moves and then they just kind of come apart. I like Blue is the one to be into, you guys. I mean, now that's an institutional name. Notice how it's not that volatile, very steady. Comes into the 10-day line here, volume's drawing up, and now it's flying out of here. Kind of reversing though on the day, but it's already extended. But that's a nice name. That's probably more real than some of these other ones. There's so many biotechs out there doing all kinds of interesting stuff that I think it's easy to get. I wouldn't get bogged down so much in what they're doing as I would the price action. So GWPH holding tight along the 10-day line, and you see how it runs up just like I got tight here, it's sort of doing the same thing, but a little more selling this time around. But that makes sense because you probably have some overhead from this part of the chart back here, and it looks like it's acting okay. Kythera, now here's one you had to buy when it's holding along the 20-day, 65-day exponential volume drawing up in here in the extreme, and then it pops out. You get a couple pocket pivots. You don't want to buy them. This one you could have bought the pullback here 3 days ago. Now it's going higher. Zyop probably had its move. That was a good move, you know, even from 10. That's where I would start buying something like this. I think we talked about it in here. Because the institutions will get interested, and you had a nice move, 40%. That's decent. You can take that. Intrexon, though, is related to them, and this could develop into an ugly duckling situation. It's a possibility. So kind of keeping an eye on this. It's getting a little tight, but it's had some selling, mainly because it's had a decent move out of here, so we'll see. Anyways, what else? I'm going to wrap this up here. SWKS acting well. Watching some of these things. Here's a BABA running up. CRM kind of flopping around. Amazon pushing, doing pretty well actually. So you know you've got some names acting well. Cyber on fire. There it is, starting to go. So well, I'm up $1.56. I wouldn't call that on fire, but it's going higher. Maybe that's all you guys pushing it up because I said it looked viable right there. Anyways, so hopefully it's been somewhat helpful. It's still a difficult market. The market's not going to hand you anything on a silver platter. You're going to have to work for it, I think. And that's pretty much all I have. Anyways, Dr. K, you got anything? Are we?
Yeah, I mean, it's basically a reiteration of the market seems like it's pushing higher here, but and there is a lot of leading stocks that are acting well. So the internals are there. It's just that unfortunately this is a Seinfeldian kind of market. So just because everything looks good doesn't guarantee that the market is really going to just take off right out of here. And it has been stalling out the last 3 days. So. The same advice applies. Keep your stops tight on this one because if the market heads south again and does one of these zigzag patterns, you want to be taking your profits.
Yeah. Anyways, thanks for showing up, everybody. We'll catch you next week. Have a great day.
So long, everyone.